You've all heard of online training for real estate investing, and that really kind of doesn't work. Not doesn't work that well. Then you have the coaching, mentorship, and stuff like that. That work in some situation, but it was not enough. Like we had tried these things with our investors, but it didn't cover everything that was needed.
Listen, everybody, we all know that real estate is the most proven way to build wealth. But why isn't everyone wealthy from real estate then? It's hard to know where to start, and most of the education out there is just complete trash, and you end up investing your money on a series of courses instead of in real estate. That's not how this podcast works. We give you the blueprint to successful real estate investing and bring on guests actually willing to share their secrets. I started my real estate investing journey as a freshman in college when I bought my first duplex and have been in the trenches doing deals ever since. And today, I now own hundreds of millions of dollars of investment property. On this podcast, you will learn what you actually need to know to be a successful active or passive real estate investor. And we'll offer our takes on what's happening today so you can navigate this market and build wealth. I'm Drew Breneman, and this is the Breneman Blueprint.
All right, welcome to the Breneman Blueprint podcast. Excited for today's episode. Have Eric Martel on, co-founder of Flip System, and he's also got a really good book out. It's called Stop Trading Your Time for Money, which obviously I think that's a great lesson. I've stopped doing that ever since basically I was almost being done at the end of my teenage years. So something that I was fortunate to learn early. So it's great you got a book out. So welcome, Eric.
Yeah, nice. Thank you for having me, Drew. Yeah, starting to work 9 to 5 is a really bad habit, and it's better if you never get into it.
Yeah, don't get addicted to that paycheck. So that's a good lesson for everyone. But yeah, so you're in real estate. I guess let's maybe just start at the beginning. How'd you get into real estate and where you're at now?
Well, I always like to kind of talk about my background and how I got started, and because when I wrote my book, like Stop Trading Your Time for Money, it was really an introspection into why I got to where I was today. And then I always go back to kind of my parents, and their view of the world was very, very simple. And also, they really didn't understand how banking works, how business works, or how, insurance works, or any of that kind of stuff. They would just go to work. You can make a little bit of money, save a little bit of money, but basically we're living paycheck to paycheck like most Americans, and then they didn't see the world, like they didn't have an open mind about business and stuff like that. And I saw some evidence of that there was a gap between my parents' understanding of the world and how the world actually works. And I said, well, I prefer this other world here when I'm looking at this guy that has a business and this guy that, makes money doing, investment or real estate or something like that. And I knew there was something out there. So I was always very curious about that. And eventually I met someone that was a community college teacher. I met him through a friend at university. And just a regular guy, like community college teacher, no smarter than my parents or anything like that in terms of education level or anything like that, but really, smarter about investing and all that kind of stuff. And so I just asked him to be my mentor, and and this is how I got to buy my first 8-unit apartment building. No money down and still cash flowing. And that's through him, through his encouragement and stuff like that and guidance, that I learned about the real estate business and started investing in real estate at that age, even though I literally had no money. So.
And how did you put that first deal together then?
So that first deal together, obviously there's a lot of research. Like I was money poor, but I was time rich. I was going to university at the time, and you would spend like 3 or 4 hours a day for university stuff, and then you have the whole day to yourself to keep yourself entertained. So I was spending a lot of time to find the right deals. I probably analyzed like over 400 deals.
And where were you?
Like one or two that the numbers worked when they were fully financed with bank and somebody else or an investor.
And Eric, where was this geographically at this time?
So that was close to Montreal, actually. I was living in Montreal at the time, so that was about 45 minutes outside of Montreal. So,
okay, nice.
Yeah. And then, so I basically went through, and out of the two, I asked like, okay, well, how do I, can you do a seller financing or something like that? So only one of them was willing to do seller financing for a portion of the loan. And that's the one I bought. I went to, look at banks and credit unions, got a loan actually from a credit union. And the seller basically gave me the rest, lent me the rest of the money at decent interest rate. I think it was like 6% interest rate, so it's not cheap.
Right. But yeah, I think that it's interesting, your observation, even at a young age, where I've noticed the same thing where, a lot of people who are successful real estate investors or have a successful business, it's not necessarily because they were the smartest person in the room at, on every scenario. Usually, it might almost hold you back in a way, where like a lot of times I joke with some other real estate investor friends, like we're just, dumb real estate guys, where we're not actually, dumb, but compared to, people writing algorithms for high frequency trading or something, like this is pretty simple. And then, you got to be willing though to put in the work and take a risk. And you did that. And I think also over time, then you develop an expertise. So yeah, maybe you're not, you don't need to be a straight A student to invest in real estate, but you do it for a while and you really know a lot about it. You get good at it. And then it's similar to the person that you're talking about that was, kind of like your parents, but then had just a different outlook. And also he ended up having a different expertise. He spent his time learning about investing and then had a totally different outlook on it.
Yeah.
So then, great. Yeah. Then what happened next?
So this was really my rich dad, poor dad. That's kind of how I describe it, because he was kind of like my rich dad, even though he was not that rich, but he had like a 36-unit apartment building, and he was planning to do like a shopping center and all that kind of stuff, and a nursing home. And so he just knew how to do things. And I make a differentiation also between like IQ, somebody like you mentioned, like a straight A student and stuff like that, and being smart. You can be very, very smart, and in some situation, in some investment or whatever, you will outperform someone that has a high IQ because you're smarter. You could be smarter than the higher IQ person. So I make a differentiation on that, and real estate is a great equalizer. I mean, it kind of like it's easy enough for everybody to understand what's going on, what the how do you make money, how do you profit from that, where your costs are, and all that kind of stuff, and to have a good once you have a good understanding of that, I mean, it's very easy to build a portfolio and be a real estate investor. So, but to answer your question about what happens next, I mean, after that, I graduated from university as an actuary, and I started working with pension plans, corporate pension plans, and everything I was doing day in and day out was basically destroying something that's called defined benefit pension plan. So basically, pushing all the risk of people saving for retirement from the employer, who were kind of like guaranteeing a certain level of retirement, and then moving that out to the employee. And I was doing that day in and day out, and I was just like, oh my God, this is gonna be a nightmare when people are gonna start retiring, and then they're gonna realize that they don't have enough money to retire. And this is exactly what's going on right now, is that most people 55 to 60, they've saved like just under $100,000, and they're planning to retire, at 65, 70 and stuff like that. So you have to, and if they need something like $1 million in savings in order to retire, it's going to be tough. It's going to be a tough road when you're 50, 55 years old. Yeah. And yeah.
And even if you had, a million saved, like that actually, it sounds like a ton of money, but if you're going to try to live on that, that's not, you don't generate that much income. Could be, 30 to 60 grand probably, depending, what interest rate you're going to be able to earn at. And so they're going to end up spending that quickly. It's interesting that you had a position where you kind of saw that at a young age, because you hear about that where, retirement plans are going to be paying out less, or they're going to be going away. And so, because Who would have been a part of that retirement plan then? That was like for public employees in Canada then?
Yeah, I mean, in those days it was everybody. Like pretty much a lot of I would say like 50% of the employees had some form of defined benefit pension plan, and but then the government kind of got involved and then kind of like started putting in restrictions and told employers that you need to index the pension, you need to pay for this, you need to do this, do that, and it just kept adding on to the cost of that. And every once in a while, I mean, employers could have like a surprise where they say, your pension, the stock market, let's say, went down, and then the reserve for your pension plans are below what they should be. Then, the employer has to write a check now all of a sudden for a few $1 million to cover the gap. So the employers are kind of like not too happy about that system from that perspective, but it was great for employees for sure. So, and now the important thing is that the employees are the one now that are responsible. So that gap that the employer had to fund now is the employees that have to fund that gap. Unfortunately, they realize that there is a massive gap when it's a little too late. When they're like 50, 55, that's when they start realizing that,
Right. And these were companies that were offering pensions, to be clear, or this
pretty much. Right now, the only people that are left really are large corporations with unions, and then the government, public.
Yeah, that seems to be the same in America. Same way where it's in Social Security. That's doesn't seem sustainable. So that's interesting. You're able to learn that at a young age. So then, what did you saw that and realize I need to, do something here.
Yeah, that really helped me. The real estate investing really opened my eyes into something. I knew I could make money without putting time into it, but unfortunately I just graduated and I said, okay, well, I better do I need to get more money so that I can invest in real estate. And I eventually moved to California in 2000, and I had a lot of stock options at the time, and like millions of dollars in stock options. And then the dot-com crash, and then these few $1 million that I had were basically, zeroed out. So I was like, okay, so I guess this is my, but I knew even when I had that money in the stock options, I said, okay, well, I have to do something with it. And I was looking at real estate, but really I was in California, so the numbers really didn't make sense. It was very difficult to find something that was cash flowing, paying for itself, unless you put a ton of money into it. But then your return on equity was horrible as well.
Yeah,
you make like a 1% return on equity. So then I thought I might as well keep it in the stock market and let it ride. But I diversified within the stock market. So I sold some of my stock options, but I still had like $1 million of stock option. And when the stock goes down, it goes down very quickly. The value goes down very quickly. And I say that with a smile for some reason. I don't know why.
Well, because the options probably went away
right now.
Yeah, the options probably went away very fast when the stock.
So the options went away very fast. Luckily, I had invested some money outside, and like I had cashed in and then bought some other stock, but the whole stock market was down, so there was no place to hide. And it's kind of what we experienced last year, and what we're probably going to experience again this year.
So what did you learn during that period of time? What were some key lessons?
So what I learned after that, when I was hit by the dot-com crash, I said, well, I have to be more in control of my finances, of my investment. I mean, I invested in the stock market and some good companies and all kinds of different things, and then all of a sudden the whole stock market crashed, and a lot of the money was in stock options. And I know the company that I was working for was great company, blah, blah, but it doesn't matter because the stock price went down. All of a sudden, the stock options are worthless. And it's like, okay, well, I want to be in control. I want to a certain extent, at least see ahead of what's happening, what's the road ahead. And then if I'm in control and if I fail, if I lose money, at least it's my fault. It's not some random stock market thing that's hitting my portfolio that I can't do anything about it.
Right. So you wanted control. That's the key lesson.
Yeah. So that was the big thing. And then when I started going down that road, I said, well, so what else do I want now? I want to be in control. I want something that's cash flowing, that can basically grow to a certain extent. Because I was thinking, like, if I start a business, if I do this, I was trying to do real estate, but in California it didn't make sense. So I was looking at doing businesses, doing other things, and that would also cash flow. And then the idea was that I want to be cash flowing. I want to be in control. I wanted to be passive income, and I want to be able to run the business from anywhere. So that was kind of the idea. And I did a couple of different businesses. One of them was a gourmet sauce company, and so went okay, but it was really not enough to say, okay, well, this is this is what we're gonna do.
And you did that as just an investor, or you started the company and you
started the company? I started the company to do that. Yeah. And
that seems like a lot of work running that compared to these.
Getting started is a definite, because this was something that I knew nothing about, and so I just knew that we had done a catering business before, so there was some recipes that we wanted to do, but that were great and were very popular. I said, well, let's put that in a bottle and then sell that. And but yeah, just that whole process of putting that on a shelf, on a grocery store shelf, this is very educational. There's a lot of work that's involved. And at one point we were across the United States in over 400 stores in the United States, and another few hundred in Canada. So it was going pretty well, but
yeah,
the profits were not there.
Yeah, anything food related seems just super hard. You know,
it's extremely
expires.
You have to break some significant habits.
Yeah,
you know.
Well, now, any key lessons? Any key lessons from that experience? Then I'd be curious.
So yeah, I mean, so for me, so that was very complicated. I mean, I was for that sauce business. I mean, I had to learn a lot. Luckily, I had a lot of different skills, and I had money to invest and all that kind of stuff. And after we operated that business for 5 years, and then we shut it down. Right, it was a lot of work for me, my wife, and to get that done. And in the end, was it worth it? I think it was worth it, but it was not worth it in terms of
probably the
profit that achieving my ultimate goal of being financially free. So that's when I went to real estate. So the world was a little bit different at that point. We had electronic document signing, because I got back into real estate in 2015 or something like that. So we had the iPhone where you can talk to anybody and they can walk you through a property. You had electronic document signing, all that kind of stuff. So it was a little bit different. And then I thought, well, maybe we don't need to invest in California where I live. Maybe we can invest somewhere else. And then I kind of went to the drawing board and I said, well, real estate is great because it's simple. I don't have to learn a lot like I did for the sauce business or anything. So that's a good investment. Now with these two technologies, I'm not stuck to California. So I'm going to invest where it makes sense. And so I started looking at, okay, what are some of the different types of real estate investment that I can do that would be passive and relatively easy to do. And then we started looking at single-family rentals out of state that were cash flowing. And then obviously you can find these single-family rentals in California, obviously, right. But in the Midwest, in Cleveland, in Memphis, in St. Louis, there was tons of those properties that you can buy that are cash flowing. So that's what we started doing. The first house I bought was in Memphis, Tennessee, and this one was more like a burr. So basically bought it distressed, renovated it, rented it out, and then refinanced it on the back end. And I put I think that I bought it for $40,000, put like $20,000 or $10,000 or $20,000 in rehab. Had a tenant paying $750 for it. So all in, I was above the 1% rule. And then I ended up in the refinancing it. And then it appraised for, I had put like $50,000 or $60,000 in, and it appraised for like above 80 or $90,000. And I was able to basically get all my money out, and it was still a little bit money left on top of that. And I was like, wait a second. So I have more money than I had when I got started. I had an extra $10,000, and I have an asset that's cash flowing. I was like, wow.
Yeah, and you can also pull that money's pulled out, tax free, because it's
exactly.
you borrowed more. It's
exactly.
Like if you
this is amazing. I said let's do 2 more of those, and then so that's kind of how that grew, and we built a portfolio, and then people were kind of always wondering, because we had done all kinds of different businesses. A lot of our friends and family started asking and say, hey, what are you guys doing now? Like, since you haven't done the sauce business and blah, blah, blah. And so we're investing in single family rentals in the Midwest, in Memphis and Cleveland and St. Louis. And our friends, the people we knew, were just like, what? Like, what are you, like, it kind of blew their mind.
Yeah.
And so then I showed them, I said, yeah, this is what's happening. And they said, well, okay, I want to invest with you. How can I invest with you? Can I buy the property when it's done? This is kind of when we started Martel Turnkey, which was a turnkey single-family rental provider. So Martel Turnkey would buy distressed property, would renovate them, rent them out, and then we would resell them to investors who wanted to build a passive income portfolio. And we ran that. We're still running that business called Martel Turnkey, and then it's great. Last year we did 180 single family rental flips that we sold to investors. So there's a big demand for that, for investors that want to build a passive income portfolio, but they're working 9 to 5. They don't have time to look at anything, to manage renovations and stuff like that. We have.
And they still want the control, where they're the owner. Yeah. They don't have a partner. They can just buy it themselves. How did you? 180 deals. That's a lot to obviously find and renovate. But I'd be almost most curious. How did you find the end buyers? Were that because those you just have a list at this point, I'd imagine, that you built up, but
we went to that list grew over time. Obviously we didn't have that many, but basically all my contacts, all the people that I knew would be interested in this, because this is about their financial freedom and being able to retire one day. Like, nobody had any defined benefit pension plan, like I mentioned. Everybody was in 401k. And with 401k, I'm responsible for saving enough for retirement. And then what happens at retirement? What happens when I want to get the money out of the 401k? But nobody's thinking about that. And this is when, kind of for me, like working as an actuary, I said, well, you have to, this is how much what you have to do, blah, blah, blah. I started doing calculations and say, that 401k strategy doesn't work well. It works great for Wall Street, but doesn't really work well for the normal people. And that's why I kind of focus more and more on the single family rentals, because that made a lot more sense. You don't need as much money retiring with a single family rental portfolio than you do with 401k. So that was kind of like the big wake up call for me.
But that list was just developed word of mouth essentially over the last 7 or 8 years.
People that I knew, like on LinkedIn, people that I had worked with and all that kind of stuff. So, and okay. I was an independent consultant before, so I knew a lot of people all across the U.S. So, so I just put them on my mailing list and say, hey, I'm starting this new company. If you're interested, blah, blah, blah. And then that's kind of how it got started. So,
and then you've somewhat automated that, where, that's a lot, obviously. There's so much going on. You renovated, 100 plus properties you bought and sold. And
we have a CRM system, customer relationship management software. We keep track of all of that. So we're big.
Which one do you use?
I use Zoho CRM.
Okay, nice.
Yeah, and I've configured it a lot. So right now, when all our properties, as they go through the stages as we sell properties to investors, you know, depending on the stage that it gets to, it automatically sends email to the right people, to the property manager, to the realtor, to escrow, to the customer, and the investor. So all these things are all automated. So it's pretty a lot easier. That's why we're able to do so many deals. And that we did a lot of automation, but we also had a good team. We had like a couple of acquisitions people, someone that managed construction across all the different markets. We also had somebody on the ground that was managing basically the realtor was managing the contractors on the ground, and the property management company. So, you have to build a solid team on the ground in order to be successful, as well as a team of salespeople and all that kind of stuff.
Yeah, because you still live in California, right? So these are all out of state still.
All the same. So the same market that I invested personally. So Memphis, Cleveland, St. Louis, they're still very strong markets. Now I'm doing like Detroit. I'm doing Gary, Indiana, a couple of other markets, Cincinnati.
Yeah, I'd imagine those are all the lower appreciation markets on the value, but then you get your return almost all from cash flow.
Well, that's how it used to be. That's true. It used to be that especially when you compare to California, the appreciation in California was like, let's say 8%, 6, 7, 8%, on average. And then you would look at Cleveland, and it was like 3% appreciation. But what happened, though, is that as we were investing more and more in these neighborhoods, we would see the appreciation increase dramatically in these neighborhoods. And then we had appreciation like 10 and 15% in the markets where we were investing. So, it's nice outpacing California. But
the coasts have slowed down a lot, at least, California, Northeast, where that.
Now the market, right now the market's stabilizing a little bit. Obviously 10, 15% is unrealistic for long term, but the other thing too is that, we've talked to a lot of investors that invested with us at Martel Turnkey, or they are, or they just want to invest, but they want to be more hands-on. They basically want to do what we're doing. And this is why we created another company this last year called Flip System. And Flip System basically, you've all heard of online training for real estate investing, and that really kind of doesn't work. Doesn't work that well. And then you have the coaching, mentorship, and stuff like that. That work in some situation, but it was not enough. Like, we had tried these things with our investors, but it didn't cover everything that was needed. And this is when we decided to package it to give more. I said, what else do you need? Like, I need to have someone to find deals for me, and I need someone to coach me along the way, and I need, how do I do that property management? How do I get the property manager on the ground? How do I get a team on the ground together? And all that kind of stuff. I said, okay, well, so here's the offer for Flip System. You're gonna get the online training just to get you started. Then you're gonna have a coach. We're gonna give you access to acquisitions teams. They're gonna find deals for you, the same deals that we would buy ourselves. And you would be able to, we'll give you the team on the ground. We're gonna identify a market for you. We're gonna give you the contractor, the property manager, the realtor, the same group of people that we have worked with over the years. Here they are. We're going to give you a software that's going to help you track all your deals, and it's going to calculate the return, and we're going to automate that. The same way that we've automated our business, we're going to automate yours. And then, so that's what Flip System is about. It just, we connect all the dots. We gave you everything. And we connect you even with, like, if you need a CPA, hard money lenders, we're going to make all the connections for you.
And you have all the stuff you need.
Successful.
Yeah, so you have all the stuff you need. It's set up, and you just follow the system.
Yeah.
Great.
And then we had, we started that in October last year. We already have over 150 students right now, customers right now. And everybody's kind of at different stages, so it's pretty interesting. We had a few students that actually went through the whole cycle. So they bought the distressed property, went through the construction, rented it out, and then some of them one of them refinanced it. I think the other two are selling them. And one of them, is gonna make $30,000 profit on his first deal with us. And so he's part of the. If you go to Flip System, you're gonna see his testimonial there. But it's just amazing. We know it works because we've done that over the last 10 years, but it's so nice to know that now the system works. What we've put together, the training, the coaching, all of that is working, is helping someone that didn't know anything about real estate investing, had his first deal under contract within 4 days, and then ran through, did the construction, all of that, connected with the team and everything. So I'm proud. I'm kind of proud, like if my son or my firstborn or something like that. But it is kind of like a firstborn out of Flip System, of a new investors that's born out of that system. So
it's exciting to see success with that. Where you made this process, and then someone, and probably what set him apart was he just did it. Like he didn't, hesitate or overthink it. Like, I have the system, I'll just follow it.
Yeah.
Take action.
And this is the thing too, is that not everybody can do that, right? I mean, that's why the online training doesn't really work, because you need more than that. You need the confidence. You need someone to tell you, yes, this is what you want to do. And then the coaching kind of helps with that, but it's still not enough. The other thing too that I should mention too is with Flip System, you're part of a community. So there's like a Discord group, and then you can talk to other investors and all of that. And now you're part of a tribe that is going in one direction. And instead of being a tribe of the people in the highway going 9 to 5, now you're in another tribe that you're following towards financial freedom. And so once you're surrounded with these people, it's kind of like when you're surrounded with a crowd of people, it's kind of hard to go in a different direction. Right. So I think a lot of the people in the community are going to be able to help each other. And we're seeing that right now, answering each other's questions and helping out. And then, eventually these people are going to be successful.
Yeah, it makes a lot of sense. And then the same Zoho system you have built out, is that what they're getting access to? And
so the software right now, the users are on a Zoho vertical. What I'm working right now is creating a completely custom application. So that's going to be released in the next month or so. And so that the advantage of that is that then I have complete control over the aesthetic and the rules and stuff like that. Zoho is great, but it has some constraints that we have to address, basically.
Yeah, I'd imagine. But then it'll be your own software in the very near future that's gonna, you move it to the next step, it triggers the email and you set it up. That's
and that software is going to be pretty exciting. There's going to be a lot of stuff that is going to be great.
Yeah, how'd you go about making the software? Where you got to find a company, engineer to do that, or what was all involved?
Started with a contractor, and because we didn't know exactly kind of at the beginning when we started building that application, we didn't know exactly how this thing would evolve. And then it's been so successful that we've hired now like two developers to work on that, and then we're gonna wean out the contractor, so he can work on another project. Then we're gonna build our own internal team to continue the development.
Yeah, makes sense. Yeah. Then at this point, how many houses do you own then yourself or your company?
So right now I have about different, because I have them also with like Martel Turnkey, some of them that I'm selling, but I would say I have 55, so I'm 55, so about over 60 houses, yeah.
Okay.
I have to kind of like look at.
No, I know. It's the same way where, for the longest time I said I was in 30 properties, and then I sold 3, I think, and then I didn't know the number. I was still saying 30 for a while. Then I realized, I saw my sheet and I was like, no, you own 28. And I was like, it's hard to, it's a good problem to have, but I've done the same where it's, you're buying and selling. So it's hard to remember the number because it's always.
Yeah, exactly. And you know what happened too is like a lot of people that are getting started or they haven't started in real estate investing yet. Yeah, they're gonna think, oh, you know, there's these people. How can you not know how many houses you have? But yeah, you kind of after like I think after like maybe 10, you kind of like forget about how many you have, and you just like you see it as more like a
portfolio
of real estate, a portfolio. So
I can see that. Yeah. What other advice you have for people invested in real estate then? Where I think you went for this cash flow first strategy, which that makes a lot of sense to me, because one thing that it seems a bit safer than some strategies where if you're buying a building, you need to renovate it just to get to a point where it would cash flow, or then you have to sell it, you know, because it's in a place like California where there's still, even post renovation, will be almost no cash flow, where that makes sense because then prices could go up, could go down, but you always have your cash flow as long as the rental market's still there.
Yeah. Yeah, I mean, the cash flow, for me, like the cash flow positive house is great because I'm building an asset, and, you know, and so, yeah, so if I'm building wealth really more than anything. And then I have a lot of different strategies. I mean, if I want to, I can continue to get the cash flow. Over time, the cash flow is going to increase. I was building equity. The tenant is paying for my loan. I get interest expense deductions, depreciation, stuff like that. So there's a lot of tax advantages involved in there too. And it's just like, you're going to wake up 20 years from now, you're going to have this asset almost free and clear. And then you just, you know, you can refi, you can, you know, so you have a lot of options. And that's what I like about single family rentals, is that you can do that. And if you don't want to rent it anymore, you want to, you know, you want to flip it, sell it to a retail investors, you can do that as well. You know, and you just have to do a little bit more renovations, kick the tenant out, and you can do that.
Yeah.
So I like that. I like the fact that you have multiple exit strategy.
Nice. Yeah. I mean, so then Martel Turnkey, you got Flip System, your book's out. I mean, what else?
Yeah.
Anything else you want to touch on? I mean, that's a lot.
Yeah, I think this is great. I mean, Flip System, if you're thinking about real estate investing, you know, the kind of investments that we've been talking about, I highly recommend, I mean, if you go and look at Flip System and kind of like explore that a little bit. I know there are a lot of programs out there, but as far as I know, we're the only program, you know, for real estate investing that's coming from a real investor, a real estate investor. And it's also, I'm sharing my team. I'm sharing my acquisitions people, my contract manager. I'm sharing all the contractors, all the people that we have, the team on the ground. I mean, this takes years to build this kind of team, this kind of structure. And we'll help you all along the way. And, you know, with a few months, we already have one of the students that, you know, made $30,000 in profit. Not saying it's going to happen to every one of them, but yeah, so he was pretty happy about that. So if you're interested in real estate investing, you should definitely look flipsystem.com.
Nice. And so how would people, let's say Breneman Blueprint listeners, people watching this, how do they get in touch with you?
For me, on social media, pretty much everywhere is Eric Martel Official.
Okay, nice.
Yeah, right. TikTok, Facebook, Instagram, YouTube also. So, yeah.
Awesome. Well, yeah, thanks, Eric. I mean, yeah, a lot of good stuff in this. You have a lot going on. And, yeah, most people that have all these, you know, contractor and broker relationships, they're not sharing them. So I think it's an interesting product for sure.
Yeah.
Because you're actually opening up that stuff, especially. So,
yeah.
Great. Well, yeah, thanks for being on. Appreciate it.
Yeah. Thank you, Drew.
If you learned something from today's show, leave a review and hit that subscribe button wherever you enjoy your podcast. Dive deeper into real estate investing on Breneman Capital's website, breneman.com, where we have numerous free resources and information that can help both active and passive real estate investors. Accredited investors can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording and do not purport to reflect the views or opinions of Breneman Capital LLC and its subsidiaries. Views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities. The speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.